All right, we're live. We're live. We're live. Listen, guys, I really appreciate you guys. Anybody who wants to log in, jump in, please. More than welcome to go ahead and share this for me. There's a lot of people who are looking for this information and they just really don't know where to start, guys. And my role now as a real estate agent, right, is to help you guys get through this process without it being painful, right? Drop a 1 in the chat for me if you're watching this live and you feel the home buying process is kind of painful. Let me know. Let me know. If you guys are watching this live, if you're watching the replay, drop a 3. I'm going to go ahead and give it like 2 minutes so that way you guys can share this to your page. You can share this to your stories for me. You can share it to a couple of groups. It will be greatly appreciated. You guys never know who you will actually be blessing with this information. So for me, that is kind of huge, right? Because at the end of the day, that we can bless with this info, then the more that we're going to win together. That's how I see it. The more I bless, the more God is going to bless me. So I know a lot of people's goals is home buying, right? Where do I start? I feel like one of the biggest reasons why a lot of people don't get into the home buying process is because they don't even know where to start, right? So that's where I come in. Just a little bit about me. I came from the financial literacy field. I was actually with this company. I've been with this financial literacy company for the last 4 years. I personally got started because I had bad credit. I technically was a 580. I had a lot of good open standing credit, but unfortunately, whenever my daughter was just about 3 months old, I was in a very bad car accident. And the car accident led to about $350,000 worth of medical debt. So here I am in Tampa looking to be able to get into a home, and I'm getting denied because of a wrongful eviction on my husband's credit, right? So we had to figure out, how are we going to get into this house? How are we going to make this happen in a short amount of time so that way we can get our 5 kids into a house and have a roof over their head? So I got started with the financial literacy program. I got a 120-point credit score increase. I've been with them 4 years, and it just made sense for me to go ahead and get into real estate because I had all these clients coming to me. They're seeing increases. They're getting qualified to buy. So really, at the end of the day, the whole point of helping somebody fix their credit or teaching them to be financially literate, help them buy a home or buy a car, start a business, anything like that, right? So once again, thank you guys for hopping on with me. Give this post a like, a comment, and a share. Throw some flames in the chat if this is the information that you're looking for. And I promise you guys, I'm not here for anything else but to help you. So I got my real estate license in December. I've actually got 3 qualified buyers that I'm working with now. The goal is to be able to help more buyers and renters with this information. And it's really not that hard. I promise you guys, it might seem daunting. You might hear all of these different programs, down payment assistance, first time home buyers program. And really at the out there, people keep it kind of secret, and me personally, I don't like to keep secrets. So I'm going to go ahead and kind of dive into this program, this presentation that I have for you guys, so that way we can go ahead and get all your questions answered, right? So on today's agenda, we're going to talk a little bit about me and the home buying process in 8 steps. So like I was saying before about me, I'm Bianca Baez. I'm a realtor with Beta Bay Brokerage. I've been in the financial literacy field for over 4 years now, and I'm helping those same clients purchase homes. I specialize in buying and selling residential properties in the Tampa Bay and surrounding areas. At Beta Bay Brokerage, we help home buyers at from listing to living. Just know that you have somebody on your side to be able to really help you out. So I'm going to go through the home buying process in 8 steps. A lot of people, they tell you like 17 steps, 20 steps, like all of this craziness, right? But really, it's a very simple process if you guys make it simple. The very first step that you guys want to do is hire the right real estate agent. Okay, you want to find an experienced realtor who knows the neighborhood and understands your needs. We're going to be connected with local lenders that have local programs to help you with as the loan approval process, USDA loans, VA loans, anything like that. We're going to work with local inspectors. We're going to work with local insurance companies to be able to help you guys get the best rate on your programs. Number 2, get pre-approved. Okay, this is the biggest step that a lot of people try to skip. They're like, all right, I got a real estate agent. I want to go ahead and start viewing properties. Whoa, whoa, whoa. Let's go ahead and back it up to step 2. You want to figure out how much you can spend on your new home. Buying a house is a life-changing purchase. You want to set a reasonable limit. You want to collect all your financial documents and check your FICO score at freeannualreport.com. You need at least a 620 credit score. I know a lot of the time you hear people say 580, but guys, let's be realistic. We want the best interest rates. We don't want to be home broke or mortgage broke, as some people like to call it, because we're paying higher interest. The next one is going to be your photo ID. You want to have a valid photo ID for the lender, 2019 and 2022 W-2s, your last 2 paycheck stubs, 2 months worth of bank statements, and you must be employed, whether it's self-employed or it is a W-2 employment, or some people qualify with disability. Some people qualify also with Section 8, Social Security income. As long as you have a steady income and you've been receiving it for the last 2 years, then we can use that to help you qualify for this loan. So you don't want to forget to include, oh wait, before I skip forward, when it comes to getting a pre-approval with, important to keep in mind is 1, your credit score, right? We went over that. You want at least a 620. 2 is your debt to income ratio. If you make $20,000 a year and you owe $10,000 in debt, then you are at a 50% debt to income ratio, which means that you cannot afford a lot when it comes to buying a home. Obviously, with $20,000 in income, you're not going to get approved for a lot anyways, but if you have 0 debt and you have $20, $30, $40, $50,000 in income, now that impacts your loan amount. You'll get approved for more money because you have a low debt to income ratio. It just basically means that you can afford more monthly payments on monthly payments. The next thing is you want to make sure you have money saved up, okay? On average, you should have between 4 to 7% saved to cover expenses. A lot of people, they try to say, oh, I need to have 20% down to have this. You know, technically at the end of the day, you don't need that much. Is it good to have that? So that way you can have some buying power and something leveraged, some more money to leverage in this market right now. Definitely, because obviously the more money saved, the is going to be at the end of the day, because you're financing less of the loan. So you don't want to forget to include other expenses such as taxes, appraisals, inspections, professional fees. That is something that a lot of people might not tell you about. When it comes to down payment, you want to think about 3% of the purchase price. And when it comes to closing costs, you want to think again another 3%. So that's why I normally tell my clients between 4 to 7%, depending on what programs you go through. Because there are down payment assistance programs. The only thing is with down payment assistance programs, they want you to have good credit. Because technically with down payment assistance, a lot of people are like, down payment assistance. And I bet you guys think it's free money, don't you? A lot of people think that down payment assistance is free money, and that is not the truth. Down payment assistance is a second loan and you have to pay it back. Sometimes there are programs out there that they will actually waive it if you're in the property a certain amount of time or if you have certain situations going on. But 90% of the time, guys, your down payment assistance, you do have to pay it back, and you do have to have good credit for that. So this is why credit is so important. Step 3, do your initial research. Once we got you pre-approved, we know exactly how much house you qualify for: 200,000, 300,000, 400,000, 600,000, whatever it is. Now we can make a 3-bedroom, depending on how much you're qualified for. What part of town do you want to move in? Do you qualify for a USDA loan? Do you qualify for a VA loan? What is it that you qualify for? Locations and your must-have features. Once you get that pre-approval amount, the hunt is on. Step 4, we want to go ahead and check out our top picks, right? Whatever you fall in love with, we want to go ahead and find a few favorites, go see them, compare and contrast what you like about each one of them, and figure out which house we're going to go ahead and go with. Step 5, we want to make an offer. This is where it comes in your favor to have a good real estate agent on your side, because during this process, guys, I'm going to be 100% honest with you. With the way the market is, you might put in 15 offers, 20 offers, depending on what's going on or where you're trying to move. You might have to put in a couple of offers, so you don't want to get discouraged. If you do find something that you're 100% sure about getting, name your asking price. Right now with the market, everything is going at asking or above asking. So let's say you're approved for a $300,000 home. You technically want to shop around $250,000 to $275,000. So that way, if you really do love that home and you need to make an extra $15,000 to $20,000 over asking price offer, you go ahead and do that. All right, so the next step, guys, is going to be step 6. We are going to review and sign the seller's contract. Congratulations! Woo! Drop some fire in the chat if you're excited about coming on and making an offer, getting that offer accepted, getting into that first home. Your dream home is just away. Ask a lawyer to review the contract before you sign. Print and sign several copies, and ask your realtor if electronic files are accepted. Purchase a home insurance policy, okay? All locations or lenders will require a new homeowners to buy property insurance. Sometimes you can actually ask the previous owner if they will convey the property insurance, the home insurance policy over to you. If you've never been a homeowner before, that's definitely something you want to look into, because coming into new homeowners insurance, they're going to charge you crazy rates. But if you have a homeowner that's been in the some time and they can convey you their cheaper rate or give you write their policy over to you, that's definitely something that you want to go ahead and do. All locations or lenders will require a new homeowners policy, insurance policy to buy property. A solid insurance policy protects you, it protects your family. You can research companies, or we can also suggest some companies for you as well. It's definitely something that I really love to help my clients with. We were at a financial literacy event this weekend, and we got paired up with a young lady who is awesome when it comes to insurance. And when I say she is literally all over the board when it comes to insurance, home insurance, car insurance, anything that you need, it's great to work with those local lenders. Step 8, you're going to close. That's it, guys. Welcome to your new Florida home. Congratulations. Ask your real estate agent about temporary living arrangements if you're coming from out of state, or if you have family from coming out of state maybe, or grab your keys and go ahead and get into that new place. You definitely want to plan for moving day. You don't want to forget the house keys, and have those expenses budgeted as well in your down payment or in your savings. So as far as that goes, that is my new home buyers presentation. I hope you guys got some value out of that. We answered some questions. The next step that I do want to talk to you guys about is come into a lot of customers who they got 15 grand in the bank. They got 20,000 in the bank. But guess what? Is terrible. Their credit score is terrible, and no lender is going to give you a loan if you have terrible credit. So what's the point of having 20, 30, 40, $50,000 if you can't do anything with it besides waste it, right? So like this video, United Credit Education Services is the platform that helped me get a 120-point credit score increase. No, it doesn't happen overnight. Okay. No, it's not going to happen. I mean, me personally, guys, I'm going to be 100% real with you. I had my first deletions in 30 or 45 days. Let's be real. Okay. I would not be still pushing this product if it didn't work. If these services didn't work, if they didn't help you technically get through everything that you needed. So about this company, we've been in business for over 18 years in the financial services industry. Our products and services are designed to help families across the country. This is literally a package to help you get on that road to buying that house. We're leading by example as a completely debt-free company. That's our goal for you as a client, and that is our goal for our new home buyers getting into those new homes, is to be debt-free as soon as possible. We have a dedicated and consistent management team. They've been with us since the beginning. Our company has not been bought and sold, right? So that's a very important. The same key executives since the beginning of the company. So how is your credit score calculated? A lot of my clients, they come to me, they have no knowledge on credit score. They weren't educated this in schools. They were not taught about this. Their moms told them credit was the devil, right? So here's the breakdown. 35% is payment history. So that means on-time payments versus delinquencies in the last 24 months are more important. The largest part of your credit score is your payment history. So one late payment can drop your credit score 50 to 100 points. And majority of the time, late payments actually stay on your credit score for up to 7 years. Unless you're working with a program like ours, which we do help clients get late payments deleted. The next largest part of your credit score is utilization, 30%. So if you have if you have a credit card limit and it's $1,000 and you use $30 or $300 of that credit score limit or of that credit balance, then that is going to actually drop your credit score 50 to 100 points because you're going over the 30% utilization rate. So just by those two factors right there, that makes up over 65% of your credit score if you're overutilizing your cards or if you're making late payments. The next biggest part is going to be the length of credit. It's 15% how long you've actually had those accounts. The older the account, the better. The longer that you can actually have that credit card open, the better. So I always tell my clients that they always tell me how much they like self-lender and this, and then they see their credit score tank as soon as they pay off that loan. The reason why is because as soon as you open that account, as soon as you're done paying it off, they close it. And then you have to open it again. And then they close it. And then you have to open it again. And then they close it. So really, at the end of the day, self-lender is not a good tool. Maybe it's a good starter to get your foot in the door. But technically, you want trade lines and accounts that you can keep open for the rest of your life. That's the goal. If you can have a Capital One card that you have for 20, 30, 40 years, then that's what you want to do. 10% is new credit inquiries. You don't want to do more than two credit inquiries every year, because then that's considered you're applying for too much stuff and you kind of look like a risk. You look like you're desperate for credit to the credit bureaus, right? The last one is going to be types of credit. So 10% of your credit score is made up of types of credit, and that's installment loans versus revolving loans. So at the end of the day, if you do not have a car payment, then you're missing out on part of your credit score. If you do not have a mortgage loan, you are missing out on part of your credit score. If you do not have a credit card, you are missing out on 75% of your credit score. If you've never had a trade line, a positive trade line reporting for you, you're literally missing out on 100% of your credit score. And that no credit is worse than bad credit. And most people are like, why? And it's because you have nothing reporting for you saying that you've ever borrowed any type of funds, or you've ever repaid anybody, or been in a position to actually borrow money. And these are some very shocking statistics that I love to educate my clients on, because once again, we are a financial literacy company. Our goal is to educate people in the community and let them know that you're not alone and there is a solution here for you. So 1.4 million people have identity theft claims were made in 2020. 14.6 trillion in American household debt is reported as of 2021. 64% of Americans are expected to retire with less than $10,000 in their retirement savings account. Sad to me. 60% of Americans lack will or estate planning. In just one decade, student loan balances have jumped over 150%. That is huge, guys. And here is the most shocking of all. 1 in 4 Americans have a credit score of less than 650. That to me was shocking. That to me showed me that this industry has so much room for growth, because there are so many people in our backgrounds, our upbringings, that are not getting this education in school. They are not being told about how to properly utilize the credit. And the impact that we've been making in the community is huge, because now we are able to add it to where they passed a law that they have to do a financial literacy class in high schools before they graduate. And that was because of we are creating, the ruckus that we are putting into the financial literacy field. They seen everything that we do with the youth financial literacy program going back into schools, and they see how much people are drowning in debt. They're looking for the information and they're just not educated on it. So what we're doing is a really, really good thing. A couple of things. We just went over the home buying process, right? So I want to give you guys the education on bad credit versus good credit when purchasing a home. On the credit score, obviously less than 560, I really don't see that happening, especially in today's market. So your monthly payment would be $2,600 a month. Your interest rate would be at 13%, and you'd actually end up paying almost $1 million for that home. If you have greater than a 740 credit score, and technically it will be starting at 680 to 740, you'll be paying that same house purchase price, $240,000 on a 30-year fixed mortgage, $1,100 a month at a 4.25% interest rate, and you would only end up paying $413,000 compared to almost $1 million because of that interest rate. So this is why I always tell my clients, whenever you get with a realtor and they're literally sitting there telling you, oh yeah, we can help you buy a house with 580. Do they really have your best interest in mind? Do they really care about you, or are they just trying to get a commission off of you? Because me personally, I tell my clients 620, 640. If I can get you up to a 680, you're going to be in that next bracket as far as interest rate goes. So bad credit versus good credit when purchasing an automobile. So many people end up at those buy here, pay here's, and they end up with repossessions because they are just not educated on what the loan amount, the payments, the interest rates. So you can see right here, if you are paying a $500, $400 plus monthly payment on your car rate, it's because you have bad credit. A 26% interest rate, you end up paying $15,000 in interest. And this is how those buy here, pay here places get ya. This is how they get ya. because they know we're going to come in, she's going to come in, we're going to shotgun her credit to everywhere around the world, and we're going to see who's going to finance her, and at the end of the day, she don't got no money to put down, she got terrible credit, she has nowhere else to go, so we're going to charge the hell out of her. And most people see a shiny little object, they see a great little car, and they're like, yes, I don't care about that $600 a month. They're desperate. They need to go around, they need to get in the car, they need to be able to get to work, pick up their kids. So I can totally understand people getting trapped into this because they're looking at this car like their lifeline. But really, at the end of the day, guys, you can't afford it. I know so many people that end up getting repossessions because they cannot afford $600 a month, especially in today's economy. So if you have a 740 credit score, you're going to get a 6% interest rate. You're going to be paying about $387 a month, and you $1,000 in interest. So I'm gonna go ahead and tell you guys a funny little story. Last year during the pandemic, last year or the year before that, when the pandemic started, I got laid off from both of my full-time jobs. I was still running my financial literacy business, thank God. I had that in my back pocket, and I was still running my online boutique. So for me, I had no source of income when it came to W-2. I had my 1099 income, but I was nervous, right? I'm like, I just got laid off from my jobs. I needed a new car. Me and Joshua have 5 kids. So I went into Kia and I told them, I said, look, I want to buy this truck. I want to do this. And they said, okay, well, we're going to do a pull on your credit and we'll see what you qualify for. They pulled my credit. They seen my credit score. It was at a 740. I literally got the 6% interest rate. My payments are $387 a month. This is funny that this is this example. Loan amount was literally about $20,000. I think I'm gonna pay mine off in 3 years though, not 5. But so they didn't even come because of my credit score, y'all. Like, that was so huge for me. Like, you didn't even ask me for proof of income. They're like, no, your credit score is great. About how much do you make a month? And I'm like, what? I said about $5,000 with confidence. $7,000. I said between $5,000 and $7,000. They're like, all right, cool. Here's your keys, sign right here, and out the door. So you can see at the bottom here, the payment difference is $212 a month with a total of $12,000 worth of interest. Bad credit can definitely ruin your family's life, guys. Just know that your credit score, mortgage loan, credit cards, personal loans, auto loans, student loans, even your insurance. They do not even tell you that when you go to get car insurance, they literally run your credit score. And if you're sitting there wondering, like, why is my car insurance so ridiculous? Paying $200, $300, $400 a month for car insurance is because you either have a lot of accidents or you got bad credit. So you can see right here, you can see that it ends up getting paid. Mortgage loan, $41,000 if they have fair credit score compared to very good. Credit cards, fair, $6,000. $3,000, end up paying about $3,000 more in total interest. Personal loans, $3,000 on a personal loan, like let's say a payday advance or a bank loan. Auto loan, $25,000. Student loans, you end up paying more. Everything ends up getting financed for more. So proven system, a protection plan with exceptional value for a simple, no-nonsense price. We want to literally give you everything that you need to get into that house. If you have the savings account, then you need, and you have bad credit, then you need the credit restoration. If you have no savings, then you need the budgeting and the savings goal. You need the net worth tool, because these are the things that are going to be able to your spending every month coming in and out. And they're going to help you get rid of all those negative items so that way your credit score can be higher. So we offer budgeting, credit restoration, credit builder, credit attorney, credit monitoring, debt payoff, rocket financial lockbox, identity monitoring up to $1 million worth of coverage, a net worth tool to tell you what your net worth is. We give you a savings goal so that way you can get that deposit on your house, a will, power, and trust, and we participate in the YFL Family Mint. If you do not have a will and trust and you have children and you die, Do you know that the state can legally take possession of all of your bank accounts, your property, your assets, even if you have minor children and you have nothing proper, they can have control over where your children go. So this is why it's very important to have all of these things in place as a good financial background. So as far as credit restoration goes, obviously there is going to be a fee when it comes to getting started. It's only $188 a month for as long as you need the service. We do donate $9 a month to our nonprofit organization. Last year we gave over $600,000 a loan to clients or to students that were going to college, so that way they wouldn't end up with all that student loan debt. And we have donated $2.2 million through the YFL. Our goal is to educate the adults so they don't end up making the same mistakes, and then donating to the children so they don't end up with the debt that we had. We are partnered with some of the top companies in the industry. Obviously, a little company called Allstate. You are in good hands with Allstate, right? We are partnered with them with identity protection. We have the industry's best, and we get backed by proven identity protection plan from the good hands at Allstate. We are also partnered with Rocket Lawyer. So let's say this service $39.99 a month if you go through their website directly. This service is free to the protection plan members beginning on month 4. The monthly subscription dropping to $20 at that point. And then the UCES protection plan cost decreases for our clients that want to stay with us long term. We have business owners that are in our company and they want the identity protection. They want $1 million. We live in Florida. They want Rocket Lawyer. They want to have the free 30 minutes with an attorney if they need to look over legal documents, a LLC or an S corp, or if you need to get a divorce, whatever you need to do when it comes to an actual attorney, we offer. We also do provide you the opportunity to waive your monthly fee. So if you refer 5 of your friends or family, you don't have to pay your $89 a month. And after that presentation, you can see here a couple of testimonies from the company. I personally am one of the biggest testimonies, 120 points. My point credit score increase. He had student loans deleted, evictions deleted, credit cards deleted, like you name it, he had it removed. So you can see a couple of testimonies. They love the product because it taught them to get out of debt using a proven process. And I do want to show you guys a little bit of the website so that way you guys can see everything that's included. So once again, we have the budgeting, credit builder, credit restoration, savings goals. One thing that I really love about our protection plan is we give you credit builder. So if you actually come in, sorry, I got kicked out. If you come in here and you come into credit builder, we literally give you every single thing that you would need as far as your credit goes. So we have sample letters requesting reduced payments, settlement letters, cease and desist letters, counter offers, debt validation letters, what's not in your credit score. We have so much education back here. Foreclosure versus short sale, how to avoid foreclosure, benefits and drawbacks of a short sale, what to know before co-signing a loan. This here, guys, for me about co-signing, I meet a lot of people who actually co-sign, and this was huge. So let me see. I think right here at the end, it says, be sure you can afford to pay the loan. If you're asked to pay and you can't, you could be sued and your credit rating could be damaged. Did you know that 80%, let me make sure I'm getting my statistics correct. Let me see. But yeah, so 80% of loans that actually get co-signed end up back with the co-signer. And I didn't know that until I was educating myself through this program. So when people hit me up and they're like, do you think I should co-sign for this? I'm like, run in the opposite direction, run away. So we give you FTC debt collection guidelines, how your credit score affects your rates on your mortgage. We literally give you everything that you need. So another tool that I really love is the debt payoff tool, because this one will literally teach you how to pay off your house in the next 5 to 10 years instead of taking 30 years, and they will show you how to do it.
Your debt payoff system was designed to help you discover the most efficient way to pay down your debt, saving you both time and money. The first step in utilizing your debt payoff system is to decide which debts you want to pay off. This could include items such as your mortgage and credit card debt. You do not want to enter your lease or rental payments here. Those should be added to the budgeting section of your protection plan. Once you've decided on which debts you would like to include, you will enter an identifying account name, your current balance, your monthly payment, and your interest rate. This information can be found on your billing statements, which you may be receiving by mail or electronically. After you enter information for each account, click the Add button to add it to your list of debts. Your list of debts will appear below. Complete your entries and then select the Real Debt Report for a detailed summary of your current debt. Using the information that you entered, your Real Debt Report will show you how much money you will pay in interest if you continue with the current payment method, your total debt with interest included, as well as how many months it will take to pay off your debt and your projected debt payoff date. Now is where you can see the magic of the debt payoff system. Select the debt payoff plan from your menu. The first two boxes will show you the debt payoff difference. The first box shows your current payment plan based on your debt entries. You'll see the total amount you will pay, with interest included, as well as how long it will take for you to be debt-free. The second box displays the results if you follow the debt payoff payment plan. The amount of money paid in interest will decrease, as well as your payoff date. Incredible! Below, you'll see an updated report based on your debt payoff plan. This will display your new projected interest, your total debt with interest included, months to pay off, and new payoff dates. Next, you'll see an entry field for an accelerator payment. Although the debt payoff system does not require any additional funds to show results, you can quicken your payoff time and save more in interest if you do have any additional money to allocate towards paying down your debts. This may be extra money you can utilize from your paycheck or an additional source of income. Your accelerator payment should be one that you can apply every month towards your debt. You will see the impact of the applied accelerator payment in your debt payoff plan above. You can increase your accelerator payment at any time and see the benefit on your debt payoff plan report. To utilize your personalized debt payoff payment plan, follow the outline below. Each month, pay the amount given for each debt. Continuing this payment plan will allow you to save in interest and reach your debt payoff goals. If at any time you acquire additional debts or money for your accelerator payment, enter it as you did before, and your results will adjust accordingly. Congratulations on taking the first step to paying off your debt with your protection plan.
Yay! So you can see exactly why I'm so passionate about this program. They give you a budgeting tool as well as the credit restoration program and everything like that. You can see here my starting score was a 654, and it gives you process reports. It shows you, they give you collection letters to send directly to the people if you want, and it helps you with understanding your dispute letters. So I went over the first time homebuyers program, or I went over a home buying process in the beginning to educate you guys on the steps that it takes. I know a lot of my clients that come to me, they might need help with more savings or fixing their credit. So that's why I included both of these presentations into one, to be able to educate you on the process. So here's a lot of frequent questions that people have as far as the dispute process, dealing with agencies. So how long will it take the credit agencies to respond after I send my dispute letter? You will receive updated reports from all 3 credit bureaus within 45 days. The credit reports will indicate updates or changes to the accounts in dispute, as well as accounts that were deleted. Make sure that you forward these updates to the office so that way we can update your next set of letters. And if the credit agency does not respond to your dispute letters, don't be alarmed. A new dispute letter will be generated when your file. Here's the next one. I have credit bureaus in response to my dispute letters. What do I do? Your responses from the credit agencies can take up to 45 days to reach you in the mail. We always recommend mailing your dispute letters certified with a tracking number so that you can be assured that they were received by the agencies. If you do not receive anything after 45 days, the best first step is to call the agencies directly to inquire about the status of your letters. If the agencies have received your letter, they will be able to resend out your responses. Now, if they don't answer the phone for you, if they do not send a response letter back, this is where you want to call our corporate and you want to ask them for a specific letter, which I tell my clients about, to be able to help get those deleted faster. So at the end of the day, guys, you literally have everything roadmap to help you guys through months 2, 3, 4, 6, 7, 9, all the way up to 10, and make sure you services. So no matter what part of the home buying process that you're in, just know that I can help you every step of the way, whether it is getting that savings together, searching for the place, getting you in with a lender, helping you with insurance companies. No matter what it is, I'm here to help you, but it is a two-way street. You have to come to me and ask me questions, and I'm going to point you and guide you in the right direction. That is my goal. My goal is to help you fix your credit and buy a house, right? At the end of the day, my whole motto is to build more leaders in the community and to help more women build wealth through equity. So I'm really grateful for you guys. Thank you so much. You can see my contact information there, 813-573-5277. If you need anything, please let me know and know that I'm here to help.